Hey everyone, welcome to Financial Revelations. I am David Safransky, your host, and I'm back. You could always see me at Twitter, formerly known as Twitter on X, at SkiBucks, the number one. You can call here, of course, all these numbers are going to be scrolling below me. WCRF on Thursday mornings, 103.3 in Cleveland, but on the Moody Radio App, you could hear it from anywhere, and that's from 8 a.m. to 9 a.m., and of course, we love your listener questions. Send those to Corey at epsf.com. And then one last shameless plug for nativosusa.org. We have also a GoFundMe campaign for the well and a church that we would like to construct in the Amazon. And you can go there and you can donate. We'd love it if you did that. If you want the money to just go to the well dig, you could put on there, used for nothing else, and we will honor that, of course. And there's no administration costs. 100% of the money that you donate goes to whatever. We don't collect anything from there. 100% goes to the well dig. So I want you to feel confident in that. And we're just trying to raise money to do good things around the world. When we dig a well, it's in a village that's never had fresh water before. So the kids in that village and some of the adults have never drank fresh water. They drink right out of the river. There's dysentery. Of course, it'd be like taking a cup of water out of Lake Erie and drinking it. We don't do that. They do because they don't have a choice. So we drill a freshwater well and deliver the gospel, and we put missionaries in the village, and they're asking for this. And they are invited to come to the church mission base and have church and meals and things like that. If you want to go with us, you can go. We're taking people with us. We're going to go next June, and I'd love for you to go. But absent of that, you can kind of be with us by sending your money, and we would love for you to do that. So it costs a little over $10,000 to drill a well that will work forever. And we go back and we service it and put in fresh filters and things like that. So today we're going to talk about the war in Isreal because people want to know what I think about it and how it's going to affect markets and interest rates and things like that. Now, what I don't want to do is I don't want to minimize or diminish what has happened in Isreal. The things that have happened are horrific. It's been massive carnage. A lot of people have died. It's just too even dramatic to talk about. I don't even want to, but I don't want to diminish it by breaking it down to finance, but it does affect finances. So please don't think I'm doing that. I have a lot of empathy and sympathy for the people of Israel and what they're going through right now. And Hezbollah is a terrorist organization whose goal is to wipe out the Jewish race. So you could see why Israel's response would be extremely massive and quick, and they are reacting. And of course, Hezbollah is a terrorist organization financed and trained by Iran. Iran has been enabled and emboldened by the Biden administration because the Biden administration, by not enforcing the oil sanctions, has really given Iran $60 to $70 billion that they didn't have before. I know we just gave Iran $6 billion. Oh, it's their money. But we control it because we control the world banking system. We don't have to give it back to them. When Donald Trump was president, we got hostages back and didn't have to pay anything. But the Biden administration, quite frankly, is too stupid to do that. And so they're not going to do it. And so they found a way. They've basically emboldened Iran to go out and create terrorist activities. And that's what they've done. And why we were giving, it's not we, it's the Biden administration. Why the Biden administration was giving Iran $6 billion, they were planning this attack on Israel. And we had been negotiating with them for months. And of course, they have $70 billion that we've allowed them to have because of our inaction. It's a direct result of the Biden administration's inaction on oil sanctions regarding Iran, that they are $70 billion richer. And what do they do with the money? Do you think that they spend it on mothers and babies who don't have good nutrition? No. Do you think they increase the security of their water supply? Nope. Maybe make sure that neighborhoods have grocery stores where people can shop confidently with good food. No, they don't do that either. What they do is they send missiles and armaments to Russia and drones so that they could kill people in Ukraine. And they finance Hezbollah so that they can plan attacks like they did on Isreal. And they killed babies. Who does something like that? And by the way, you haven't seen the last of this. $70 billion is a lot of money. It will finance a lot of terrorist operations. You've not seen the last. You were seeing just the beginning. There's more to come. So how is this going to affect markets? Well, most notably, Ukraine, the banking crisis, Isreal, they all depressed interest rates right away. And I think what you're seeing now is interest rates are starting to perk back up again. We hit a high of 4.88% on the 10-year government bond. That's our benchmark. When that bond passes 5%, we know it's time to buy long-term bonds. Right now we're buying short-term bonds. I think rates are going to go higher. They're going to continue their trek higher. And I think by the end of the year, you're going to see a plus 5% U.S. government bond on a 10-year. So you're already seeing that on the short-term rates, but not on the long-term rates. And the stock market really kind of didn't really react too much to it. It's strange because if terrorism had happened here, the markets would be crushed. But when terrorism happens overseas, the markets look at it very differently. It's just the way it is. It's always been that way. And I know we've been dealing with terrorism in Isreal for a long time, but this is something we haven't seen for 50 years. So this is not normal, what's going on right now. And the Israelis know that, and they're going to mount a ground offensive. And there's only one thing that terrorists understand, and that's the end of a barrel of a rifle. And they're going to get that. I don't know if they're going to be able to get everybody. I don't know if they're going to get hostages back. I don't know. When I was in the Army, we talk about if you ever get taken hostage, and you really have 4, 5, 6 hours to get away from your hostage takers before they organize. When all of this is going down, I know you would think, well, everybody's in communication and everything, but that is not true. What happens is communications get disrupted. You don't know what other people are doing. You're left wondering. So that in that confusion is when you got to get away. I don't know how many people did that or were even able to do that, or I'm sure they were terrified. These are civilians. These are not military people. They're civilians. They're terrified. So they probably couldn't do that. But I think what you're going to see is Israel's going to go into Palestinian territory and they're going to wipe it clean. And a lot of people are going to get hurt. And the Palestinian people, I don't think, represent Hezbollah. They probably just want to live peacefully, but Hezbollah has made that impossible for them. And now everybody's going to pay the price. So we'll see what happens, but rates are going to go higher. And the market before this happened, the market was pushing rates higher. They were doing some of the Fed's job, carrying their weight for them. But just today, we got a hot CPI report, and rates are going higher. The Fed is going to go higher, maybe not in November, but I think before the end of the year, they got one rate hike, and maybe one rate hike in January. And then I think they're out because of the presidential election. And they don't want to be seen affecting the presidential election, but I think it's too late for that because we're going into a recession in the first quarter. I'm fairly certain of that. And that's going to affect the presidential election because I think Joe Biden's also going to be getting impeached during the presidential election cycle. And we're going to be in a recession in the presidential election cycle. It's going to be really hard for the Democrats to get Joe Biden reelected. And people know that the economy isn't great. This is not a secret. They could talk about Bidenomics all they want, but really what it's created is inflation, runaway inflation in some cases. And I know we report inflation at about 3.7, 3.9%, But I go to the store. It's higher than that. It's in the fives in real life terms. So, and I'm watching the price of meat double in some instances. Now, the price of eggs has come down quite dramatically from where it was, but it isn't back to where it was before. And, we always have some inflation. The Fed's mandate basically creates about 2% or right around their inflation. And this is different this time. This is high and persistent and entrenched, and it's going to be very, very difficult for the Fed to bring this down, and that's why they got to go higher. So we are going to go into a recession. It could be mild. We don't know yet. We really don't know until we're there and see what the Fed does in reaction to it. My guess is they're going to be late to the party, and they're going to wait to lower rates because they don't want to have to raise them again, so they don't want to reignite inflation. So they're going to let things languish. The Fed wants unemployment at 4.5%. It's at 3.7 right now. So people are going to be out of work. Economy slow down. So what I'm going to do next week is talk about the recession and good investments in the recession, things that you could use to weather the recession. Just because there's a recession doesn't mean the stock market goes down the tubes. The stock market tends to think 6 months ahead, and so by the time we declare a recession, the stock market's out of it. We're already buying things that were low. So you got to be ahead of this curve. So you might buy some things at uncomfortably low levels, and the two calls I get the most are, why did you buy that? That thing stinks. And why did you sell that? It was going so great. Well, I like to remind people at that moment about the buy low, sell high mentality that we have in money management, and that's why we do those things. So like firemen running into a burning building, we got to go where the stocks are underperforming with the idea that they will overperform later. That's how investing works. So you got to buy when the blood is in the streets, and I think we're going to get some blood in the streets. And I'm also going to touch on how to survive a presidential election cycle when the rioting starts. And I think if Donald Trump is the Republican nominee, it's going to look a lot like 2019. They're not going to let they're going to foment rioting and violence and dissent in cities. It's not going to come to the suburbs because, well, I think you know why. That's where all the guns are. And so that's not going to happen, but it could. And I'm not going to talk about, you'll have to tune in. I'm going to tell you how to survive that time frame and good recession things to own and how to survive it, because we don't know. And I know we've been talking about a recession for a long time, but I think things like Ukraine and the banking crisis and now the war in Isreal kind of elongate this process. They make it just take longer because the work of the Fed gets interrupted when rates drop 30 basis points on the 10-year Treasury in 2 days. That slows that process down. It makes it just take longer, but it is a process that is happening, and it is going to happen. So when people say, well, you've been talking about a recession for a year now. I know. I was also talking about rates going higher for 3 years before they actually did. So I was a little early to that party, but they did. And when the Fed raises rates like this and you have an inverted yield curve where you're earning more on a short-term bond than you are on a long-term bond, it's typically followed up by a recession. But we've had these exogenous events happen that have elongated this process. So hear me now, believe me later, it's happening. I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.